All right, buckle up because today on the deep dive, we're going to cut through, all the legal jargon and the market buzz. We want to get straight to what really matters about a truly landmark ruling. We're talking about Google's epic antitrust battle. It's a decision that's not just shaking up the tech giants, but it's also subtly reshaping your daily digital life. So our mission today, pretty clear. We're taking a deep dive into the federal court's remedies for Google's search monopoly. What did the judge actually decide? What does it really mean for Google? For other big players like Apple, and maybe most importantly for you, the person clicking, searching, and swiping every single day. We've waded through a whole stack of fresh sources, detailed reports from CNBC, the Wall Street Journal, the New York Times, Bloomberg, to bring you the clearest picture we can.
And setting the stage here is absolutely crucial. You have to remember, Judge Amit P. Mehta, he already found Google guilty last year. Guilty of illegally monopolizing the search market for well over a decade. So this latest decision, it isn't about whether they broke the law. That's settled for now. It's about what happens next. It's about, designing the remedies to try and restore some competition. The stakes couldn't be higher, really. This is easily the most significant tech antitrust ruling we've seen since the Microsoft case way back in the 90s. Its effects are going to be felt for years.
Okay, Brett, let's unpack this. It sounds monumental. I want to start with maybe one of the biggest questions everyone had going in, Chrome. The Department of Justice, they really pushed hard to break up Google, right? Specifically forcing them to sell off the browser. What happened there?
Yeah, that was a big one. And what's really fascinating here is what the judge didn't do. He just flatly rejected the DOJ's request to force Google to divest, sell off its Chrome browser. He actually called the demand an overreach, said Chrome itself wasn't really used to create the illegal restraints in the search market, so forcing Google to sell it. He saw that as a poor fit for the specific things Google was found guilty of. The key insight, I think, is that the judge saw Chrome as, distinct from the search monopoly itself, and that effectively safeguards Google's strategic AI future. Chrome is seen as a prized asset. It's critical for AI stuff, AI deployments. Losing it would have been a massive blow to Google's whole position in this generative AI race that's heating up.
Huh. So the judge drew a pretty clear line there, protecting Google's future plans, keeping that browser safe as a key asset. Okay, let's shift gears then to another major flashpoint. Those huge multi-billion-dollar payments Google makes to Apple. They've always been right at the center of the DOJ's argument, haven't they? What did the judge decide about that?
Indeed. This was probably the most watched part of the whole ruling. And the judge confirmed, Google can continue making those really substantial payments to Apple. We're talking over $20 billion a year, just to stay as the default search engine on iPhones, Safari, all of that. And just for context, that deal, it represents a huge chunk, something like 15% of Apple's entire operating income.
Wow. That's significant.
It really is. Now, there is a crucial nuance here. It's not a total free-for-all. While the payments can continue, Google is barred from entering into exclusive deals that require its search engine or Chrome to be the only option. They're also restricted from tying, their Android App Store licensing to using their other products.
Okay.
So it's not a complete blank check, but it's definitely far from the forced breakup or the payment ban that some people feared, and certainly a win for Apple's bottom line.
It still feels a bit counterintuitive, though, doesn't it?
Yeah.
I mean, why let these massive payments continue, especially when, like you said, they were so central to the monopoly claims? Didn't the Wall Street Journal report suggest this was a huge point of contention for Google's rivals?
That's a really important question. And yeah, the judge's reasoning here is pretty revealing. He actually argued that stopping those payments would end up harming the companies receiving them, like Apple. His thinking was it could lead to fewer products and less product innovation. I mean, think about it. If Apple suddenly loses that $20 billion plus income stream, they'd have to find it somewhere else, right? Maybe higher app prices for you, maybe less R&D, potentially impacting the devices you use every day. The judge also kind of acknowledged that, yeah, users can technically change their default settings, and, many of us think we're tech savvy enough to do it easily. But the reality is most people just don't, especially not on mobile. He looked at the DOJ's idea for choice screens, those pop-ups forcing you to pick a default search engine. He ultimately rejected that, called it too intrusive into product design. His whole approach, he said, was one of humility, basically saying a judge shouldn't try to jolt the system when market forces, especially with tech changing so fast, might sort things out anyway.
Okay, so the judge basically kept Google's crown jewels, Chrome, and the Apple partnership largely intact, at least in structure. But where did he draw the line then? Were there any meaningful new restrictions, any new shackles placed on Google that will actually change how they operate day to day?
Yes, there definitely were some, although how much impact they'll have is already being debated. Google now has to share some of its search data, specifically parts of its search index. That index is basically Google's giant organized library of all the websites it knows about. And it also has to syndicate its search results, basically allow qualified rivals to display Google's actual search results on their own platforms. The idea here is to help rivals build scale, compete a bit more effectively, sort of dilute Google's advantage from just being the default everywhere. But, and this is the really crucial bit, Google does not have to share all its data. That includes its super valuable advertising data, its entire proprietary search index, or its huge knowledge graph, that interconnected database of people, places, things. None of that.
Right, the really valuable stuff.
Exactly.
So if they're not sharing the secret sauce, is this data sharing even a real leg up for competitors like DuckDuckGo? Or is it, like their CEO apparently called it, just a nothing burger? What was Google saying?
Well, that's precisely the skepticism that popped up almost immediately. Google, for its part, naturally raised concerns about user privacy with these requirements. Critics might say that's a convenient shield to protect their data hoard. And yeah, on the other side, the CEO of DuckDuckGo did indeed call the shared data a nothing burger, basically suggesting it wouldn't really help them mount a serious challenge to Google. So it suggests that while, okay, there's a requirement to share something, the limits on what gets shared mean a truly level playing field. That still seems pretty far off. Oh, and one more thing. Google is also restricted from making its own AI the default search in key places like Android, Chrome, and even on Apple devices. That affects both its current search product and, importantly, its emerging AI stuff.
Okay, got it. We've dissected the specific orders, what Google can and can't do now.
No.
But to really get the big picture, to understand the tremors this sent through Silicon Valley and Wall Street, we need to zoom out. Let's look at the ripple effects across the whole tech world. And the first place we saw that ripple...
It's stock market. Absolutely. Stepping back, the immediate market reaction, it tells a very clear story. Google's parent company, Alphabet, saw its shares shoot up over 8% in after-hours trading. Hit an all-time high, actually. And Apple's shares rose to about 3%. Wall Street analysts, they pretty much immediately called it a massive win. A dream scenario even for both companies. Some analysts even bumped up Google's price target significantly to $245, talking about potential for maybe $300 a share down the line because of what they call valuation multiple expansion.
Which basically means?
It signals that investors now see Google as a much more stable, more attractive long-term bet. They feel it justifies a higher price relative to its earnings, especially since that DOJ overhang, that cloud of uncertainty from the lawsuit, is now largely gone.
So Wall Street basically breathed a huge sigh of relief. They see this as a kind of green light for Google's current way of doing business. And it really sounds like the judge was heavily influenced by just how fast the tech landscape is changing, especially with AI popping up everywhere. That feels central.
It absolutely was. Judge Mehta explicitly pointed to the rise of AI as a reason for not imposing harsher remedies. He argued, let market forces do their work. He said generative AI startups, think OpenAI, Anthropic, Perplexity, they're already in a better position to compete with Google than traditional search companies have been for decades. Google itself had argued its search monopoly was kind of backward-looking now in this new age of AI competition. And that argument clearly landed with the judge.
Interesting.
And this ruling, it also effectively paves the way for potentially much closer AI partnerships between Google and Apple. You could see Google's Gemini AI system integrated directly into Apple devices. Think about that, Google's latest AI, right there on your iPhone.
Okay, fascinating implications for AI.
Yeah.
But looking beyond just Google and Apple, what does this ruling signal for the rest of big tech, particularly around mergers and acquisitions, M&A? You hear talk of this being a catalyst.
Yeah.
Are we just talking smaller acqui-hires? Or could this actually embolden big tech to go after bigger, more transformative deals?
It's likely a bit of both, but with some important caveats. Some experts definitely think this ruling will be a catalyst for tech M&A, give bigger companies more freedom to pursue their growth plans, potentially boosting M&A volume this year. The judge's reluctance to force divestitures, especially Chrome, that does seem to signal maybe a less aggressive judicial view on breaking things up. So that could make those strategic bolt-on acquisitions, buying smaller companies to add capabilities, seem safer.
But not necessarily giant mergers.
Exactly. It's probably not a clear green light for all large, substantial acquisitions. Remember, other regulators like the FTC and even the DOJ itself still have other tools. They can scrutinize and block mergers they see as potentially monopolistic based on specific market harms, not just the company's overall size.
Right. In this case itself, filed way back during the Trump administration. It's setting a pretty major precedent, isn't it? How do you see it influencing those other big antitrust cases, the ones against Apple, Amazon, Meta? Does this make it less likely, for instance, that Meta might be forced to sell off Instagram or WhatsApp?
Oh, it absolutely sets a precedent, no question. The outcome here, the judge's reasoning, the remedies he chose, legal teams and regulators in those other huge tech cases will be studying this very closely. Now, every case is different, of course, but the arguments that worked or maybe didn't work for Google in this search-focused case, they'll definitely inform strategies going forward. And yes, for example, some analysts do think this ruling makes it less likely Meta will be forced to divest Instagram or WhatsApp. They point to different business models, different specifics. But yeah, this definitely provides a roadmap or maybe a cautionary tale for everyone else involved in these fights.
But it sounds like this case itself is still far from actually being over, right? These things rarely end neatly with one ruling, especially when the stakes are this high.
You are absolutely right about that. The legal saga is set to continue. Google is almost certainly going to appeal. They'll appeal the judge's original liability finding from last year, and they'll appeal these new remedies. And the Justice Department, they're studying the decision right now. They need to figure out if it goes far enough to actually restore competition. They might even cross-appeal, arguing the judge didn't go far enough.
So years more in court, potentially?
It implies the case could be mired in courts for years, potentially going all the way up to the Supreme Court.
Absolutely. And remember, the remedies themselves, they apply for 6 years. So there's a long period of compliance and monitoring ahead, regardless of appeals.
Okay, so even with this major ruling, the legal gears will keep grinding for a while. What about oversight in the meantime? Is there anything to make sure Google actually follows these new rules? Yes, there is, actually. It kind of echoes something from that historic Microsoft antitrust case back in the day. Google has to create a special committee, a 5-person antitrust technical committee, and it has to include privacy experts. This committee's whole job, basically, is to make sure Google complies with the ruling over the next 6 years. They act as an independent monitor, scrutinizing how Google implements everything and whether it's actually fostering competition like it's supposed to.
Okay, so wrapping this all up, what does this really mean for you, our listener? We've got this complex picture, right? A mixed outcome, but honestly, largely favorable for Google. They keep Chrome, they keep making those huge payments to partners like Apple, although with some new limits on exclusivity. There's some limited data sharing required. And all of this is happening under the big shadow of this rapidly evolving AI landscape, which the judge clearly saw as a major factor.
Exactly. And looking at that big picture, especially how the judge explicitly leaned on the fast-changing AI market to justify maybe a lighter touch. The real question, I think, for you to mull over is this. Will these remedies actually work? Will they truly foster a more competitive search environment in the long run? Will they offer you more meaningful choices down the road? Or will Google's massive foundational advantages just adapt? Will they persist in this new AI-driven world, continuing to subtly shape your digital experience in ways that are, hard to see, but incredibly powerful nonetheless? That's definitely a thought worth diving into a bit more on your own.